Hey, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com. And we've been in business since October of 2002, if you can believe it, publishing our market letters every single market day. We have weekly and daily letters. We also have two live trading rooms. And this is coming to you live from the live trading room, which was established back in 2019. We've been doing this every market day. I share exactly what I'm trading, the ticker symbol, the entry price, my stop price, the reasons for the trade, target price, and all of that. And if you're interested in that, plus joining an amazing community, really big community now of great traders of all different levels. We've got brand new traders and we've got very experienced traders and everybody in between. And I kind of manage things, but we have a lot of good conversation back and forth. Go to drstoxx.com, click on the subscribe button. If you want interested in a stock advisory, go here, live trading room here, and the brand new live options room, which you can add on to the trading room for just $30 more a month. All right, let's look at some charts. So we've got kind of an unusual day today in that it is a mostly bullish trend up day from the open to where we are today or where we are this afternoon. But we are mostly down on the indexes relative to Friday's close. Why is that? If we've been trending higher, why are we still down? Well, we're not down by a whole lot, but we started down. We started low. We gapped down off the open. Sunday night futures came out down about 30, 40 basis points. They got weaker than that by the time we got to the open. The open was a flash down lower off the bell, and then it was just slowly creeping higher. And the thing that really triggered the bulls to come back in were the ISM numbers. We got those at 10 o'clock this morning. So an ISM, there are two ISM numbers. They come out once a month, each of them. One is for manufacturing, not as important since only about 30% of our economy is in manufacturing. The other is the services ISM. And this is a survey, by the way. That's what the S stands for, a survey of those who are in services business, right? CEOs, CFOs, uh, headquarters of this and that. And how is business going there, right? We're looking at billings, we're looking at inventory, we're looking at new orders, we're looking at sales. And you put all those numbers together and it spits out a percentage from 0 to 100. 50 is your midpoint. Anything north of 50 is a growth number. Anything south of 50 is a contraction number. And the market was looking for something just a little tick higher than 50, which a miss on the downside would have been a contraction, which is recessionary. And instead, we got a pretty big upside jump, beat expectations altogether. It was like 52 something percent. So that's good. That's very good, right? That relieves us of recession fear, suggests that in the services sector, 70% of the economy, things are still going pretty well. And even with tariffs and the uncertainties and all the things that are going on in the overall economy, including some geopolitical tension, we're still looking at a pretty decent growth phase for the economy. It's slow growth, and there's a lot of you know holding off on new capex or new investments or new expenditures because we're just not sure how much things are going to cost down the road. And there's been some shuffling around of supply chains and so on. But here's the good news. This came out a little bit over the weekend. A lot of it came out last week. When Trump initially announced the tariffs back on Liberation Day, and that was about a month ago now, the market was is still in a pretty good place. It hadn't yet priced in all of the concerns about tariffs. Well, from that day forward, the tariffs just kept getting worse and worse and worse. More and more countries were involved. The percentage of tariffs were higher. Negotiations were few and far between. And so the market really tanked fast right after Liberation Day, down about, I don't know, 12, 13, 14%, depending on the index on that news. Now, from that point, April 7th was the low of the tariff panic. We've been clawing our way back higher since then, and the whole narrative around tariffs has been getting better. The numbers are coming down. The areas of the economy that are sheltered from tariffs are getting bigger, and we're hearing more and more. Although I'm not sure we have any concrete deals done yet, but we're hearing more and more about countries, Japan, India, and of course China is going to be the big one. Mexico, Canada to some extent. We're hearing more and more about deals being made. Just don't know exactly what those are yet. So all that is good. The market is. Let me show you the market. So we're going to focus here in this time together on the major indexes and then the major stocks of those indexes, and we'll see where they're at with their charts. So I'm going to first of all get rid of all these lines here. Let's clean up the chart a little bit, and I'll explain to you what I have on here too. If you're new to us and or need a refresher on some of our technical indicators. So on the background here, overlaid of price, we have the linear regression channel, the LRC as I call it, set at 100 period look back. That is your default. And I have it on here twice, one at 1.5 standard deviation. That gives me the salmon colored band down below, the darker blue colored band on top, and a 2.0 standard deviation. And when you put both of those on, you get a nice little powder blue band on top. That's your sell zone. And your pink band down below, that's your buy zone in a general way. And the mantra is with the LRC, buy the pink in an uptrend and then sell the blue in a downtrend. Okay, and if you buy the pink in a downtrend, which you could have done a few days ago in April 7th, you could have done it a couple of weeks ago, right? You would be making some money if you had done that. But in general, your target price when you're buying a downtrend is going to be the midline of the LRC, not the blue zone. So the fact that we hit the midline on that initial thrust, this was not even in the pink zone, it was below the LRC, outside of 2.0 standard deviation, which is pretty rare. We hit the midline, and the 21 period moving average. They're pretty close to each other and rolled back over again. However, we printed a higher low. That was really the saving grace in this whole downtrending, almost bear market. I mean, I think we hit a bear market level for a day or two, or maybe on an intraday basis. We certainly hit it. Now, it hit higher low, right? Big bullish engulfing candle on that reversal day, forgetting exactly what happened on that day. And then we've just been up 8 or 9, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days in a row. If we close here, that will be 10 days higher in a row, and that's very, very rare. In fact, 9 days in a row, which we hit on Friday, was not seen since 2008, I think, or was it 2004? It's been a while. 10 days in a row, I have no idea. No, we'll have to see. But here's the thing. We went past the 21. We went past the midline, and we're testing as of Friday, and again today, we're testing the 50-period moving average. This is, of course, is a mean reversion trade. It got too far away from the mean. Now it's returning back to the mean. I have a whole trading system based just on that configuration. We get, X percent away from the mean. It shows you a couple of things, and then you buy it and hold until it hits the mean again. So the fact that we're a little bit above the 50-period moving average, maybe you can see that. I'll zoom in a little bit here, right? We are above the 50-period moving average. We are actually trading right now above Friday's high. That's always a good thing. And the market's just continuing to go up. So when it was... when we had this big green stick and we hit the 21-period moving average and we started to roll over a little bit, it was pretty easy then to think about going short. We did. We put on some hedges, some inverse funds, and we made some profits on the way down. When it hit a higher low and reversed higher very quickly, I personally was not thinking it would continue higher. I thought we were going to hit the 21 again and roll over, or the midline of the LRC and roll over, or these range highs right in here, which coincide quite nicely with the former support low. These range highs, right? Resistance highs, support resistance flip. We call that whole line in there. We hit that last week, and we just continued higher. So we've been slowly burning through these areas of supply, these areas where typically you see in a downtrending market, especially, you see the market rolling back over, testing the lows again. But no, it doesn't seem like the market's going to do that. And as I like to say, we have to trade the market we have, not the market we want. Not that any of us wanted it to roll over, but that was the expectation, right? Because the tariffs are still so unknown. There's still so much uncertainty. And if you hear the CEOs whining on CNBC about the tariffs, you'd think that, the sky was falling. Well, apparently the market is seeing right through all of that and realizes maybe some of it's a little bit politically motivated and maybe some of it is just, scare tactics or I don't know what. But regardless, the market is saying to us that tariffs are still a concern, right? We're still in a downtrend. We're still well below the all-time highs, but we're slowly starting to make our way back because the market is optimistic about the near-term future. Market is a forward discounting mechanism. It doesn't price in what's happening now. It prices in what it expects to happen over the next several weeks and months. That's where we're at. The market is optimistic. If the market is optimistic, who else wants to be optimistic? You should all be raising your hand right now because we want to go with the market. All right. So right about in here, we started to flip from trying to, catch the next downside move, which never happened, to going modestly, cautiously going long on a variety of different positions. So, so in the live room right now, we're long the S&P, we're long the NASDAQ 100, and a couple of other stocks as well. We're just kind of nibbling right now. We're not fully invested by any means. We don't think we'll get fully invested by any means, not until we really get better clarity. But we'll just trade one day at a time, as we always do. Okay, so what is our view on this this pattern? Well, I'll tell you what, there is kind of a pattern forming right here. I don't know if this is the pattern, and it hasn't formed yet, so it's just speculative. But here's the left shoulder. Here's a nice looking head that is forming up to the neckline. If we get to the neckline, then we might see that rollover. We might see a little bit of a weak rollover forming a right shoulder, which should ideally be the bottom of which should be above the left shoulder's bottom. And that would put it right around 41,000 for the, this is the Dow Jones. Sorry, this is the Dow Jones. 41,000 for the Dow Jones on the downside. If we do get that, no guarantee we will, but if we do get that, then we'll look to build a bigger position in the right shoulder ahead of breakout, anticipating that breakout to come. All right, but let's wait and see. So we've got up here at the same place as that neckline, we've got the 200 period moving average. If I get rid of the neckline, you can see it. There it is, that green line, the thick green line. And we've got the blue zone of the LRC coming up as well, but I don't think we're going to have too much of a slowdown between now and then. It's not going to go up every day between now and then. I mean, it could, but not likely. We'll get a couple of days down and a couple of days up, but the up days should be a little bit bigger than the down days, and that's usually how things go. All right, we're due a bit of consolidation, and we have the Fed coming up on Wednesday of this week, 2 days from now. All the major earnings are already behind us, and we don't really have much in the way of economic data. So it's really all about the Fed, and I suspect there'll be a little bit of caution coming into the Fed Tuesday, Wednesday. The Fed is not going to cut rates. They can't right now because the job market, as we saw on Friday, is still pretty strong. ISM numbers are good. There are some hints of some weakness out there, but really few and far between. Mostly it's just sluggish growth, slow growth. So the Fed can't really cut rates right now. They wouldn't really want to anyway. They probably will cut 2 or 3 times by the time we get out to the end of the year, unless things get worse. They don't look like they're going to get worse. The market's not expecting them to get worse. So I think I'm going to say this optimistically, the worst is behind us and should be pretty good going forward while we're still hammering out the details of the tariffs. All right, let's look at the S&P. So the S&P is forming the same pattern, right? We're in that head. Here's your left shoulder, here's your head coming up into what would be the neckline, 200 period moving average, and the S&P is a little bit higher here because we're already touching the blue zone. We touched it on Friday. We pulled back a little bit today, right? That's typically what happens up there in the blue zone of a downtrending LRC. But there was no follow through, at least so far today, no follow through to the downside. Um, the volume has been very light. That's not a bad thing when you're extended like this, right? If everybody's plowing into stocks right now and you get this big volume print on the upside and it's up 3% or 2% even on well above average volume, that could very well give us a capitulation top. We had a capitulation bottom right on that day. That's the lowest of the low, April 7th. Huge downside, big upside volume, and that turned out to be the low, right? The same thing happens on the upside when you get, up, up, up every day, every day, every day, and then suddenly all those bears that are still they're still out there shorting stocks. All those bears realize they have to cover. All those longs that are on the sidelines are going to have the FOMO, fear of missing out. They're going to jump in. You're going to see hedge funds and major money managers who have been on the sidelines as well. They're in bonds, they're in gold, they're not in stocks. They're going to jump on board, and then you're going to get this capitulation top. So, but we're not there. And I don't want to see a capitulation top. I don't want to see a whole bunch of volume coming in. Let's just let the market kind of float higher day after day, slowly, boringly, and continue to give us the gains that we're looking for. Here's the NASDAQ, where NASDAQ's already up at the 200. It tagged it on Friday, recoiled a little bit today. We are in the blue zone. Now, normally, in the blue zone of a downtrending LRC like it did right up here, that's a time to pull out profits, time to maybe add some bearish exposure, and maybe that's exactly what we should be doing. But we're not seeing any of that manifest today. We're not getting a sell signal. We're not undercutting any lows. We're not seeing lots of panic up here at the top. No, none of that. It's just a very quiet day. Choppy, yes, but quiet. And it's up near the highs of Friday, and we're banging up again against some resistance. So as long as we keep banging up on that resistance, we're not going to go down. We're going to keep maybe not going higher, but we're at least not going to go down. All right, the small caps. This to me, I'm going to remove these drawings and then put them back on. This to me is maybe the greatest sign of hope that we have in the market right now. If the small caps, which have just been underwater for 2 years or more, nowhere near the all-time highs, and really got hit the hardest on tariffs, as expected, right? Because their margins are smaller. If the small caps can start to rally, if they can get up above these major moving averages, if they can get above trend lines, if they can start to break out to the top of the LRC, then the rest of the market is bound to follow. So this is what I like about the small caps. Oh, that's an alarm for me. Hold on. Okay. If the small cap, I'll get back to that. If the small caps can break out of the downtrend, which is what they did last week, and form a nice little 4-bar consolidation or bull flag right there. The 21 is now starting to curl higher. They're above for 2 days in a row. They're above the 50-period moving average. We're moving into the blue zone. If we can start just continuing to track higher, it's going to pull the rest of the market up with it. So I like what the small caps are doing. Do I want to go long the small caps just yet? I wouldn't kick anybody in the pants for going along something like TNA today. I suspect, however, we probably a couple days from now, maybe on the Fed, we get a little bit of a better entry. So, but it's on my radar. It's definitely on my radar. Now let's take a quick look at Bitcoin. It was down really big today. It's a bit off the lows. This could just well be a bull flag, but it is kind of a funny shape, maybe more of a pennant. But anyway, it's consolidating. It's had a nice run off the lows. It was a very consistent run. It got above all the moving averages up into the blue zone where it's starting to have some trouble. typically where you get some trouble because it's now 2.0 standard deviation away from the mean of this trend. And that's usually the place where things get a little weak. Um, but I suspect that there will be a nice move in Bitcoin coming shortly. Not today, not the best day to buy it. So oil gapped way down, went even further down last night, got down to over 4% off the lows. But I think today we might also be going long in the room in just a little bit. Hold on a sec. I messed it up. Just for a mean reversion bounce, right? So you've got the double bottom. You've got all kinds of bullish divergence. If I show you my divergence indicator, you'll see it. Here we go. There you go. So you've got RSI, stochastics, on balance volume that are showing, they're flagging bullish divergence on this double bottom. The gap down today did not help the bullish cause, but it is being bought back up. If we can close somewhere near the highs of the session, I would think that oil will get a little bit of a bounce, more of a dead cat bounce. But if it gets up above the pivot, which is here up around 64, then it could complete a double bottom pattern, which would get it up to about 70. So it's at 57 right now. And one nice way of playing oil is with the micro E-mini contract. The June contract, that's MCL. And yeah, so I actually nibbled a little bit in the pre-market on oil. I mentioned that last night in the live room. And it's up nicely from here. We'll just see if that gives us a buy signal. I don't think we're quite there yet, but let's see where it closes. And maybe we can get in tomorrow morning, if not later today. We are long gold, and we bought it on this little inside day bar on Friday using the MGC Micro E-mini, and it was a nice follow through today. Really, really nice, strong. It's our star today. It really is our star. It's up 2.5%. And yeah, gold is looking good for another leg higher. If it can get out to new all-time highs, great. I don't think we'll be in it that long, but we'll see where it goes. It's acting as safe haven. The dollar's been weak. And when there is uncertainty in the market, gold's usually a pretty good place to be. You're also seeing big central banks hoarding gold as well. Yeah, good question there. A guy in the room just asked if I could give ticker symbols for these trades if you don't do the micro minis. Yeah, I do encourage everybody, if you have a margin account, to qualify your account to trade the micro minis. They trade just like Stoxx. They have very good leverage. You don't have very little cash outlay. You don't need much cash to trade a single contract. $1,500 to $2,000 cash to trade a single contract to hold that position overnight. But if you want to trade gold, I would recommend UGL, which is the double X bull for gold. The other ticker symbol is SHNY, shiny, which is a 3X, brand new, 3X for gold, SHNY. Oil, you can trade with UCO, that is the 2X leveraged ETF fund for oil, pure oil. And Bitcoin, of course, is IBIT. And small caps, you would want to go TNA. The MNQ, which is the NASDAQ 100, is TQQQ. MES is SPXL. And UDOW, UDOW for the Dow. Okay, let's move from there. Well, one last thing I wanted to show you are bonds. I think bonds are going to have a bounce. And they've not been very good, right? So bonds are in a multi-year downtrend. It is the longest time they've been underneath their all-time high in history. It's been 5 years. I'm pretty sure we're closing in on 5 years anyway, since the bond market has made a new all-time high. It's just been weak. Yields have been high. Regardless of what the Fed does, yields are staying stubbornly high. Mortgage rates are over 7% and all of that. All in all, not a good place to be. But I do think that bonds will have their moment. If we do flow into recession, of course, you'll see bonds bounce back quite sharply as a safe haven. And if we get a Fed that's dovish, you'll see the yields start to come down a bit. but I'm hoping, this is my hope, that what started here on the 11th of April with a higher low on the coil back, the first coil back, and now a potential another higher low with a higher high, you're starting to see a little bit of a trend develop, right? Higher high, lower, higher low, higher high, higher low, higher high, higher low. That's how trends start, and this could be a new uptrend. Not holding my breath, just throwing that out there. Okay, let's take a look at the mags list. We'll do worst to best. Apple is not looking good. It broke out of I showed this to you all last week. This is a rising wedge, which is not bearish until it breaks to the downside, and it broke to the downside on Friday. So Friday, the market was good, right? Everything else was going up. Nasdaq was up, S&P was up, small caps were up, and Apple was down. Not a good look for Apple. So I don't know what's going on with Apple, frankly. They got through their earnings a couple of days ago. They were down on earnings. It was a double beat. It was a raise of forward guidance. I'm not exactly sure where the issues were. I am in Apple long term in my family fund, and I'm in way down there, right? I don't know, $20 a share or something after all the splits. Been in it for years. So I'm not that concerned. I assume that what's his name will get the company back on track. And I did read that they're moving more and more into the personal health space, which they already do with their phone and the watch and all of that, but they're kind of ramping up that. Maybe that's going to help. I don't know. There's the robo-taxi, and there's some autonomous driving technology and AI and all of those kinds of things that Apple is venturing into, but I'm not sure that they're producing the kind of income that they thought. So Tesla, here's the thing about Tesla. It is flagging in a bullish pattern. And if you want to compare what Tesla did during tariffs to some of the other mags and the NASDAQ 100, we have to say that Tesla outperformed. It didn't fall quite as hard on the tariff news. It had been falling, so we have to take that into account. It started to fall well before most of the other mags, but it bottomed out early, and it did not print a new low on April 7th, and it's been holding that low ever since. And now it is up against the 50-period moving average. Yeah, there's a little bit of bearish divergence working in. That can be a problem temporarily because it's usually a very short-term signal, and they don't always work. But I have to say, here's your flagpole, and then you've got 1, 2, 3, 4, 5, 6 bars of pretty much choppy sideways action. That's consolidation. It's all above the 21. Good things happen above the 21, not so good below the 21. The 21 had just crossed the 50, and we're bumping up against the 200, and we're knocking up against the 200. If we can close above that, I think we'll be okay. Let me show you this hourly chart of Apple. I'm sorry, Tesla. It's so messy. Let me show you the chart that I used with, hold on a second, let me find it. There it is. Okay, so this is Market Surge. It's the software tool I use to scan for stocks. I use it also sometimes for market analysis. This is NVIDIA's hourly chart, and this is Tesla. Okay, so I can draw lines on here, but I won't. If you put a line over these tops, back to the 26th of whatever that is, and then this one on the second or third, and then this top here on the 9th, and then this little cluster of tops right here. You draw a trend line. It's perfectly formed right there. Here's your breakout move. Big breakout, 4 or 5 days in a row, straight up like a rocket. And then we've gone sideways since then. The lows down here around 270, 275. The highs up here around 290 or so. And we're in the middle of that range right now. Today, it had to hold 280. 280 would have been perfect, but it did crack that. It went down to like 278, 277, or maybe a little bit lower. But it held and kept above the bottom of this range. That's good. Now we're rallying back higher. I think for the short term, we want to be long Tesla. This little high tight base here should break out to the upside. It's about a 25, maybe 25 point spread. So you add that to the top, 25 plus 290 gets you up to like 315. And that would be a nice target, right, from here. So some calls are in order if you're that inclined, or you can buy some TSLL, which is the leverage version. I like Tesla going forward for the short term. For the short term, everything that we're talking about on the bullish side now is short term. So Amazon flunked us out of some calls. We had a call spread on in the other room, and it had done really well. So we moved up our stop, and I just moved it up a little too tight. Didn't expect the drop down today. It has held the 21-period moving average. Not unlike Tesla, it's doing a little bit of a flag pattern here, but it's not a strong pattern. It's not a strong trending chart. Yeah, unfortunately, it is what it is. All right, Netflix was way, way down on some bad news. It has come all the way back. It's still red on the day, but that's a nice nice buyback of that gap down. It's down on tariff news. The only news that has affected Netflix happens to be on the entertainment industry, of course, and the brand new that came out over the weekend, thanks to Mr. Trump, and Netflix got whacked off the open, but it's such a strong chart. This is one of the strongest charts out there, and it just bounced right back up again. So here's Avgo. We are long Avgo in the live trading room, and it's up. We're up about 20%, I think, in our wealth building portfolio with Avgo, and it is now starting to break out of this trend line. If we put a line over the tops, right, we are in breakout mode, and 21 is crossing the 50. The 50 is right at it's giving us a little bit of a death cross, which never pay attention to the death cross or golden cross, because by the time you get that signal, all the fireworks are already done. But everything does look like it's starting to tick higher for Avgo. I like it as a hold. Not necessarily a buy up there, but it's a hold. I like NVIDIA for a test of the 200. We're long Qualcomm. It's starting to work off the lows. We're now back to a little bit of profit, I think, in this position. And yeah, starting to close up the earnings gap. So that's good to see. Microsoft, we were long Microsoft in my trend trade letter and just got out as of this morning because it tagged our target price. So we were down here. 362 was where our entry price was, and here we are selling around 440. So that's nice. It's not a buy up here. Let's let it cool off a little bit. Facebook, this one broke out of the downtrend a while ago. That's good to see, right? There's your downtrend. Here's your breakout. Here's your confirmation on earnings. Always good to see a bump up on earnings. Earnings can be really good. The stock price goes down. That's not good. Earnings can be not so good. The price goes up. That's good. It's all about price, right? It's only price that pays you. I'm kind of interested in jumping into some Google because I like what's happening here. It's just very still new. Here's your lowest low. Here's your higher low. Here's a higher low. And we're starting to see, right? Here's your pivot high. Here's a new pivot high, a little bit higher. We're starting to form a new pivot high, a little bit higher still. It could be a rising wedge, right? Because the range is getting narrower and narrower, but it could also be a brand new uptrend. So we'll have to see where that goes. And yeah, that's about it, guys. I'm going to let you go. And let me see what time it is, 2:43. Actually, all right, SG has a question about our wealth building portfolio. So yeah, back at the COVID crash in the live room, I started to recommend stocks. Most of them were really, the Apple, NVIDIA, Tesla, the blue chip tech stocks. We started to buy those on the crash, right? And we started to nibble in. We went in thirds. Some of them we got in a little bit lower. We averaged averaged in. Some of them we had to pay a little bit up, but we knew with COVID being a temporary thing, it seemed obvious to me at least that this was an artificial recession and things would bounce back pretty quickly. And we made all kinds of money on that. We called it the recovery portfolio, since have named it the wealth building portfolio for obvious reasons. And so we have just continued to do that. Sometimes we do it on market dips, like we just bought a bunch on this tariff crash. All those guys are doing well. We'll might buy a particular company if it's in sort of a bad place, a couple of bad quarters or whatever. Apple is, a good example of that. A very good company having a bad stretch, and you can get the prices at shares at a discount. And we have closed out about 90 positions, and 82 of them, 83 of them, 84 of them, something like that, have all been profitable. So it's been a really nice extra money booster for us. And what's nice about it too is that we've got these set of longs on, right? And most of the time we're buying at a deep discount. When the market is having a really big up day, especially in a downtrending market like this, really big up day, and maybe you're not prepared for it because you didn't buy a bunch of longs the day before, but you've got the wealth building portfolio on. It's riding that wave for you. So it's kind of a nice way to keep a consistently long exposure to the market without having to worry about it day to day. That's the goal. We do have target prices on those. Most often we sell out before the target price. It's all about managing risk, right, over time. But I think I like it. I really like that approach to the market. In addition to our swing trading, which is what we do day in and day out. Okay, let me take a couple of chart requests since we do have a little bit of extra time. If you want to type a ticker symbol into the trading main room, I'll keep an eye on it over there, and let me know if you have a chart you're interested in. It might be a stock you're already in, or stock you're looking to get into, stock that you're worried about. Go ahead and type those in, and I'll see what I think. But I'll let you know if I don't like it. So that's the warning. All right, BSX looks good. This is a old school biotech or drug making company, and it is looking pretty good. Now, I can just look at this chart and I'll tell you a few things you want to focus on, and you can say, pretty much of a thumbs up or a thumbs down right away. Look at the linear regression channel. Is it upsloping or downsloping? This is upsloping, so that means the 100-day trend is good. The 21 just crossed the 50, and the 21 is nicely upsloping. That's good. That's bullish. Look at the 200. The 200 down here is rising higher. That's the longer term trend. That's bullish. So there's a lot of bullish stuff going on. Plus earnings, gap up. We don't really care if the earnings were good or bad, but the price going up and holding that gap open for now a couple of weeks, very good. Very, very good. That's a revaluation of the company. There's a whole trading system that is built on going about 2 weeks after earnings, but looking for stocks like this that have gapped higher. The gap is still open, and they're trading somewhere in the middle of that range since the day of earnings. That's they're not always the most exciting because a lot of the the fireworks have already happened on the earnings gap up, but they are a lower risk form of trading, and they usually work pretty well. So this one is good. It is in breakout mode. If you put a trend line over the tops of the highs there, you can see that it has broken out. Doesn't seem to be that concerned about tariffs. Yeah, it did hit a low on early April with the rest of the market, but it has bounced back very quickly since then. No, I really like this. This is bullish. It's not in the perfect place right now for a brand new trade, but if I were already long, I'd be holding and maybe adding. Your initial target price is going to be up here. The former highs around 106. Not a big move from here, but it's not a big moving stock. And if you held it on a little bit longer, I think you could probably get something up in the blue zone somewhere out in June or July, and that could get you up to around 114, 115. That's a little more exciting. So I like that one. Yeah, that's a good one. That's a good one. CRWV. Okay, IPO. I don't know this one, but I remember the name of the company, CoreWeave, is familiar because there was a lot of publicity around the shares coming out. All right, so this is actually pretty good. IPOs are always a little bit tricky, and there are systems of trading them. So Bill O'Neill, who is the founder of Investors Business Daily, he was one of my mentors early on in trading. He passed away a couple of years ago, but his legacy is certainly worth looking into. He likes this is what he does for entry into an IPO. You look for the highest closing high off of the initial thrust of the IPO. If the IPO opens up and then it just trades down, just ignore it. Don't even think about that. But if it opens and then travels higher, that initial thrust higher, mark the closing high of that. That is your buy signal. This is his system. That's your buy signal. Now he has a secondary way of doing that, and that is that you find either an intermediate high, which might be that one right there, or you find the breakout of a trend line. I'm not exactly sure where to put that, but right about there, right, which would tie in the initial thrust high and the intermediate high, and it's already broken out. You could have bought it down in here per that entry. Otherwise, you're coming into a pretty good place to enter, right around 54.27. I would have to say that I think it's probably going to get back up to their 60, above 60 again, just based on the lack of IPOs, lack of quality IPOs, and the fact that in a tariff-ridden market, this one, and I think softwares tend to be a little bit better in a tariff market. This one is doing really well, and it's got momentum. You don't find momentum these days in many stocks at all. I really like this price momentum. So I would say it's a nibble here. Buy a little bit more on the break of that first black line and hold on to it for some all-time highs. And if you're already in, it's definitely a hold and roll up your stops. Yeah, I think that's pretty good. Pretty good in this market, actually. Very good. We just did NVIDIA it's a modest buy. We are long. We're actually long in both rooms. We're long calls in the options room, and it's just like the Nasdaq. It's printing. This one actually could be a completed head and shoulders, inverted head and shoulders, left shoulder, head, right shoulder. It's not exactly well formed. I'm not sure if that's the pattern, but I like what it's doing. It's breaking out. It's above the 50. It's kind of coiling up here, and on the intraday basis, as we saw, it's doing pretty well. So yeah, it's definitely a buy. I like it. Not a big buy. Don't go big, and don't hold long. let it play out, but it's probably going to have a pullback here soon enough. Let's just do one. Let's just do one of these banks. Let's do Wells Fargo. Yeah, I did mention in the room this morning that the regional banks are starting to get perky, and they are in a modest breakout mode. Here are your banks. Big bank here, WFC, Wells Fargo, is in breakout mode as well. Nice looking momentum. Nice looking volume balance down below. We've crossed over the midline of the MACD. That's also bullish. Yeah, this looks good. So it's coming into this pivot high right here, right at it, with this price momentum and volume, and there's no capitulation going on here. Nobody's bailing out today. I think it's going to sail right through there. So your next level is going to be up here around 80, 81. And, we'll see where it gets up to there. It might stall out for a few days here in the blue zone. That's typically where you do see things stall out for a while. But let's take a quick look at FAS. It's probably going to be very similar. FAS is your 3x leverage version so it's not as new of a breakout. I mean, I should say it's a newer breakout than the Wells Fargo. Wells Fargo's been in breakout mode for a few days. We're right here at the 50, the 200. We're above the 21, which is curling higher. Yeah, it's nibble worthy. Let's say that, nibble worthy. And what was the other one? DPST, which is a lot of fun to trade. This one is a big mover when it gets going, but this is what I mean by perky, right? It broke out on Friday, held the breakout, bullish engulfing again today, confirming that follow through day and all of that. We're just getting a little stuck at the 50, but this one could be a lot of fun. All right, guys, I'm going to let you go. God bless everybody. I'll be back in the room after I produce this, and we'll go from there. We'll trade the last hour together. Bye for now. God bless.